So we just hit over 100,000 subscribers on the channel, and I wanted to do a special video to show my appreciation. I wanted to talk about the smartest path to make $10,000 a month as a trader. I wanted this video to be raw, unfiltered, without all the editing, just me to you. And I want to share some advice with you that you probably will only hear from a very small group on YouTube. So going on 5 years now, I went wide in the industry when it comes to learning, and I went very deep. And I've studied different markets, and I've sat with different types of traders, from influencers to some of the professionals at the highest level. So what I'm going to share with you comes from a combination of private conversations, me making 10K a month as an engineer, as an entrepreneur, and as a trader. So I know how to do it, and I know what 10K can do for some of you. Some of you, if you made 10K a month, it will change your life. It'll give you the ability to leave your job, to buy some nicer things, as well as to provide a different lifestyle for your family, right? Some of you may be like me. I'm married with 3 kids. I take care of extended family. So I've always been in this game to make way more money. So 10K a month has never been my target, but I thank God that I've surpassed that. And I can talk about it as if it's a non-consequential number. That's just because of where I am now. And I hit my first 10K month using funded accounts. Okay, so I just want to be clear about that. I had a little bit over 200K in funding, and I just made a little bit over 5%, right? So that's the route that I took. And I want to give you 2 routes. There's a better route in my opinion. But depending on where you are, one route may be better for you. So I hit 100K subscribers. Let me tell you just a little bit about myself, right? So since I was young, I've always had a business. I've always wanted to make a lot of money. I come from hardworking, moral parents who struggled financially, but they instilled in me good character. They instilled good morals. And so I've always wanted to excel and make a lot of money to change the dynamics of my family, as well as get into philanthropy and make changes in the society. So like many of you listening, I didn't come from a lot of money. There have been some months where I've made more in 1 month than my parent has made annually. So I'm in a blessed position because of the foundation that they gave me. So I'm not a person that came from money. So I always had a business. I ended up going to university to be a software engineer. So even while I was in the university, I went to class, and my time spent out of class was working on my business, growing my income, growing my business acumen. I was always trying to figure out how to be an entrepreneur, because I knew with entrepreneurship, I could scale and eventually make my first million, then make my first 10 million, then make my first 100 million, and then I can become a billionaire. I went to be an engineer, and I worked as an engineer, dominating. I was always the youngest in the room. I was always the youngest leader in different organizations that I worked in. And I would constantly hit a cap as an engineer. So I ended up making a good living as an engineer. But if I wanted to make $1 million one day, the most realistic route was entrepreneurship or something like it, where the effort that I put in could be scaled, or my direct effort and contribution and creativity could scale my earnings. And I couldn't do that on my job. So I had several entrepreneurial ventures, and the way I got into trading is my brother was trading stocks. We were working for the same company, and I think he made our yearly salary in 2 months, and he had been trading stocks for about 2 years. So that got my attention, and it's hard for me to switch careers, because I'm the type of person that I really have to know that something is real, it's tangible, it has realistic earning potential, because I am married and I have 3 kids and I have extended family that I take care of, right? So there's a lot on my shoulders. So I ended up calling one of my friends. I got into Forex mistakenly first instead of stocks, but we'll talk about that a little bit later. So now I jump into Forex, and this is my mindset. And I think this is why you all have grown with me. This is why the channel is growing. I'll tell you my mindset. My mindset when it comes to learning something is to dominate it, is to master it, right? So I said, you know what? I've been an engineer, I've been a professional, I've been in corporate. What's the fastest way for me to learn and become proficient at trading? So as an engineer, I was one level beneath the VP, or like the assistant VP, right? In one of the companies I worked for. And I was pretty young to be in that position. And one of the ways that I did it is I read everything I could, everything in my particular niche on engineering. So let's say there's a coding language called JavaScript. I read about 20 books on JavaScript and from different perspectives so that I could achieve mastery from learning from those different perspectives, right? So what happened is I came through one particular avenue with Forex. I saw the influencer space as well, social media, but I quickly shifted because as I was reading different books, I have a list of 50 books. And I said, you know what? I'm going to read these books so that I can gain knowledge of this new domain that I'm stepping into. And I can see some things that, and if I learn from the pros or those that have mastered this craft, then I would be able to navigate a lot faster. So what I didn't know and what I come to know later on is that 50% of the books that I read could have been written by people that were not profitable. Okay. So when you come into the industry, you don't understand that there are people on YouTube that aren't profitable. There are people in these communities. There are people on social media. They're showing a lifestyle. They're telling you how much they made, but they have no third-party verification, but they aren't profitable, right? So I digested a lot of information, but where my turning point came is when I found S&B Capital. So I read Mike Bellafury's book, One Good Trade, and this really shifted my entire perspective on trading. Then I read his second book, The Playbook. Then I went and got their education and a few others. This is when I saw like the quantum leap in my trading. So just imagine I'm trading Forex, but I'm learning from professional stock traders. So a lot of the groups that I was in, and I was going through funded challenges, and this helped me pass funded challenges and get payouts. A lot of the groups that I was in, you hear contrary ideas, right? You hear the pros saying one thing, and again, there can be different types of professionals. But what I found in my reading and in my trading, there was a line of continuity and logic amongst the pro traders that I found, and that's what I'm bringing to YouTube, because many of the retail traders that are being educated from the social media layer of traders, a lot of the stuff that we're taught in the social media space is actually contrary to what is going on in the pro space. So if you want to make 10K a month, you're going to have to master, or you want to possess 4 skills, okay? The first one is playbook with edge, right? Having and understanding positive expectancy. So when I first started, I was just consuming all these patterns, consuming all these different strategies, but I hadn't heard any conversation about edge and about positive expectancy, okay? So that's number 1. Number 2 is execution, having the ability to execute that edge, okay? Number 3 is a good risk plan, okay? Having a daily stop, having a weekly stop, having a monthly stop, exponential bet sizing, betting a consistent amount on your easy money plays, sizing those up, or when you have confluences stacked in your favor, you add sizing, okay? And then the 4th one is professional mindset, psychology. So when I first started learning, I was learning all these 4 together, which was a huge mistake, okay? So listen to my interview on my page. It's the Way of the CPT podcast with Lance Brightstein. A lot of stuff that I'm talking about when it comes to edge, positive expectancy, and I'm going to make some comments about market efficiency here pretty soon. A lot of that he covers, and he's a verified trader. He's made over 10 million for over 3 consecutive years. He's made at least $30 million as a verified trader from verified from multiple sources. Okay, so one of the things that he emphasizes is if you've been learning from someone that doesn't have edge and you've been at it for 5 years, you've been wasting your time. And if you're focused on psychology and you have no edge and you haven't had a system with edge for 3, 4, 5 years, then you've literally been wasting your time. Okay. So on the pathway to 10K, the very first thing that I would be focused on and hyper focused on is finding playbook, finding strategy or a handful of them that have edge, that have positive expectancy, that have true edge. Okay, now when it comes to edge, the founder of S&B Capital, I was listening to him. Now, what I'm going to say for some of you all is standard. If you come from a certain community, I find that in certain communities, this is standard language and common knowledge. But where I come from in the Forex space, this isn't common knowledge. Now, this is going to be good, okay? If you've been struggling, you say, hey, Abdullah, I don't have any edge. A lot of people come and they said, man, I've been trying for 4, 5, 6 years and I don't have any edge. And I'm able to help them turn it around because of what I'm about to tell you right now. Okay. So your pathway to 10K, what I'm about to give you now, it may contribute to you achieving this 10K a lot faster, or I may be able to remove something that is inhibiting you from accomplishing that 10K. Okay. With this knowledge that I'm going to give you right now. So they went from just a pattern-based strategy. They went from trading just a basket of instruments, like maybe just trying to trade SPY or SPX or ES, or trying to trade the Qs or NAS 100 or NQ, right? Or just trying to trade oil or gold. They went from trading just a basket to finding the symbols that are going to give the widest range of movement, right? That are going to give you directional skew. So what this did is this allowed them to consistently beat the market because they're constantly looking for the stocks that are trading with the most volume and trading with the most range. And you all know, some of the days that are the most intoxicating, if you trade indices, let's say you trade futures, you trade NQ, you trade ES, those days that are most intoxicating are the days that you have a massive drop or a massive rally. And it's hard to make a mistake on these days, right? So when I heard him say that, they look for the stocks that are in play and they look to take just a small piece of that, many times just scalping or intraday. It changed the game for me, because what I had noticed is that I would make money. I would make the most money on US 30 YM or SPX or NAS 100 on the days when you had the widest range of movement, and I would be losing and I would get chopped up in my account and I would go into drawdown on the days with the tighter range. So a part of that was I needed to develop my selection process. Okay. I need to become more selective. So the very first step, in my opinion, is to take a step back wherever you are right now. Some of you all are just starting. Some of you are 2 years in. Some of you all are 4 years in. Okay. Wherever you are now, if you're just starting, I'm glad you arrived here. This channel is all about bringing the professional knowledge to the independent retail trader like you and I, okay? It's great that you landed here first. Now, take a step back, okay? You need to look at your strategy, your system, and you need to ask yourself, do I have a way to select when I'll have the widest range of movement for my particular strategy? Do I have a way to select, to be selective, to discern when my symbol or my tickers are in play versus when they aren't, okay? And then number 2 is, after I decide that they are in play, do I have a consistent, repeatable method of extracting money? And does that system work over a period of time? It has to work over years, okay? So that's one question that you have to hyper focus on, okay? Now, let's go a level deeper. Now, while you're answering that question, I want to let you know that I also found out that some markets are harder to beat consistently than others, okay? So it's common knowledge amongst pros: Forex, indices and commodities, and then stocks. And then you have other crypto, right? And I'm not saying it's impossible to beat the market when it comes to Forex, but it's very efficient. So Forex is one of the hardest markets to beat consistently, year over year over year over year, for years, okay? Then after that, indices and commodities, okay? And then stocks. Now, why is that? So with an individual stock, you have events that happen. Let's say you have Apple, they come out with a new product or they come out with earnings. So you may have a rally, strong rally with multiple percent gains, or multi-day rally that is caused by an event, okay? So after that event, you have some price discovery. With indices, with SPX, you have 500 companies. So there's a lot of randomness because those 500 companies are moving, right? There's a higher degree of randomness with an index versus an individual stock, okay? Then stocks themselves give us more data than indices and commodities, as well as Forex. Okay, you have more pure data. You have not only you have the price data, you have the volume that is actual, okay, that's traded, and you have a lot more information. When you move over to indices, the volume that you have available, it's either the speculative volume from the futures exchange or the speculative volume from ETFs. This isn't the actual volume traded by those 500 different stocks, okay? So there can be divergence in the volume that you actually have access to. And then also those like the indexes, the indices, their tape is dominated by algos. So a lot of times it's hard to get meaningful data. It's not impossible, right? So if you're listening to this, I'm not telling you that it's impossible, because I've helped a lot of people come to me. They're trading NQ, they're trading ES, they're trading YM, RTY, and they need help with the selection process and also bringing in order flow. And a lot of them turn around their careers. A lot of them I help get funded, get their first payouts by bringing those elements that I mentioned to them. Some of them have made 10,000, 15, 20,000 a month from changing to this model that I'm talking about now. Okay. And then Forex, let's say you have Euro USD, you have the ECB and you have the Fed, right? You have the Euro economy and you have the US economy. You have inflation, interest rates. You have a lot of monetary policy decisions. You have a lot of things that are going on. And then there's less events that come into the market to inject some price discovery into the degrees of randomness. So if you are trading Euro USD every day on a live account, I'm not talking about funded traders. So one of the challenges that with funded traders, from my perspective, like I could be totally wrong, okay? But I've interviewed a lot of funded traders, and what I've found is that people have masked the efficiency debate because there's an inefficiency in the funded space, okay? You can hit the reset button, right? So you just need enough edge. You can buy 10 challenges, you pass 4 of them, you get payouts on 3 of them, right? So you can make money. There is a valid inefficiency in the eval space that can be exploited, and people teach it. People just teach you how to go aggressive, how to develop a challenge to payout ratio where you're paying for challenges. Some of them you're going to lose. You're going to get enough payouts. Some of those funded accounts you lose over time, but you can just restart. Okay. So the thing is that you can point and say, hey, I know such and such trades EU, but what you don't see is how many accounts they've blown, how many times they went in drawdown and they recovered because they could restart. Okay. Or they could rotate accounts, right? So the conversation I'm having with you right now, just think about it. Okay. And now here's where I get into advice for each of the different types of people that are listening. How do you get to your first 10K? Okay, so now I gave you the 4 skills that you have to develop, and we talked about building a playbook with Edge. Now, here's my advice, okay? If you are a new trader and you want to make 10K a month, eventually, I would recommend that you skip Forex, you skip indices and commodities, and you go directly to stocks. Now, a lot of you are probably not expecting that advice. There's a learning curve. You may say, well, what about the inefficiencies that exist in the eval space? While they do exist, the people that are extracting the most money out of the eval companies are those that have been trading 5 years or more. Generally, there are exceptions, there are outliers, but generally out of the traders that I know, majority of them that are extracting a lot of money, they've been trading 5 years or more. So the learning curve that you're going to face to learn Forex, like currencies, you can trade currencies with futures, to learn to trade currencies or to learn to trade indices or commodities, that learning curve is going to take about 2 to 3 years generally. So while you're learning and trying to pass these challenges, there are going to be some changes. And by the time you get your first funded account, you may have a 50K account, which is literally a 2K account or $2,500 account. By the time you get funded and you're learning how to get, how to beat the indices consistently. While doing that, you get to the point to where you're funded, you can make money. But in my opinion, because I've traded both and I've actually helped students transition to being unprofitable and then being profitable with indices, and then going from indices to stocks. And I can see how I've made more money. I've had greater level of consistency trading stocks. And then I've seen how it's helped students once they've made the transition. You have way more opportunities. Okay. Let's take two people. They go through a 2 to 3 year learning curve. One person, as they're going through their learning curve with stocks, they're saving up some money. Okay. They save up 5K. They save up 10K. Okay. If you save up 10K, that is actually equivalent to 200K worth of futures accounts. Okay. Your 10K is worth 200K in futures accounts. Okay. So you go through that learning curve. Now you have your own 10K and then you have futures accounts. In one, you're trading indices and the other, you're trading stocks. Let's say the person has the same skill level. The person that is trading stocks is going to smoke the person that's trading indices, in my opinion. Why? Because that person that is extracting the money, let's say they're hitting base hits on indices, those base hits won't be there every day. And then also the range of movement for the indices will be a lot smaller. So the person that's trading stocks, there are 7,000 stocks in the market. There's activity every day, especially for the scalper. So once you build your scanning criteria and you filter down, you'll find the base hits, but also then you'll have runners. Like stocks are moving 30% in the day, 50% in the day, 100%, 300%, 600% in a day. So sometimes you'll have days where you may have a 5R, 10R trade because you have a stock that is running. And then you may actually trade different stocks in the same day. So I believe if you're starting out right now and you're looking at the eval space as, it's promising, you may want to consider this alternative route because in my opinion, it's a longer term move, especially being a person that has survived losing accounts with 8 different eval firms because either they went down or they had banned US traders. Okay. So the account flipping space, that space in the Forex space may not work consistently, but there are several verified stock traders who have grown small accounts. Why? Because of the number of opportunities as well as the range of movement. Okay. You can have crazy breakout days where you have some crazy gains on a smaller account. Now, let's say you're not new and you've been trading indices, commodities for about 2 years, and you just haven't really been able to find edge. This is where I would say you may not want to shift all the way. You can bring stocks into your assets, or you just try to adopt the system that I mentioned before, right? I've helped several people that have become profitable by developing their selection process, okay? Being able to discern which day is the best day to trade indices. You can use other things. You have ADD, ADDQ. You can bring in other types of analysis to help you trade the indices. And then also you have a few setups that you trade, but you validate your entries and exits. That can help you get to multiple eval accounts and get you to the point where, maybe you have 5 Apex accounts, maybe you have 5 futures accounts, and you can hit that 10K a month with those 5 futures accounts. Maybe you take a 2K payout on each one of those accounts. You can continue to scale accounts across different firms. You could easily then hit 20K in a month, 30K in a month, 40K in a month by stacking those accounts up. Now, so if you're a person that's there and you need help, hit me up, okay? We'll get you situated. Now, how do you go full-time, okay? How do you transition into full-time? Let's say with 10K, you can live off of it. So if you're a young person, let's start there. If you're a young person, it's just you. I would recommend if you're in college or if you're living with your parents, stay with them, okay? Focus on building the skill. Everybody wants to make the money, but if you focus on skill development, if you watch that interview with Lance Brightson, he talks about how the first 2 years, he didn't make any money. Actually, he was in like a negative 60,000 drawdown. And he was next to a person who was making 100K a day, or he would have 100K days. So the average person is not just going to jump into the market, jump into trading, and then automatically start making money. You need to invest into skill development. So find people that aren't just showing off lifestyle and who are actually teaching real trading, okay? And learn, focus on skill development and building a track record for yourself and saving up your money. So either if you decide to go the eval route, save that money up first. If you do eval challenges, do like small accounts, but you shouldn't even invest any money into a live account until you have identified that you have a playbook that has edge. Okay, you have a few easy money trades, easy money plays that you can consistently make money with, right? So stick there with your parents, build up your capital. If you want to go stocks, like I said, go stocks, have the capital, get you $2,500, $5,000, $10K in an account and save up, work, save up scholarship money, save up money from a job, put it into a safe place that you're going to use to trade after you build up a track record and make sure that you have a consistent strategy. Now, if you're a person like I was that has a family, that has a lot of responsibility and people, and the ship can't go down. If the ship goes down, then you'll be in trouble. If you're that type of person, then I would recommend that you build a cushion, okay? So you're working, you're learning, you're trading, hyper focus on the playbook and having edge. I can't emphasize that enough. If you don't have any edge, then you're focusing on psychology and risk management and execution. But the bottom line is you cannot make money if you don't have a system that has positive expectancy, okay? So save up a cushion, consider taxes, right? So if you say you want to make 10K a month, normally you're telling me what you need to actually have to pay your bills and to save a little bit of money. You have a trading business. As an eval trader, you're like a contractor. So when you get paid from the eval firm, you have to pay a percentage of that in taxes. If you're trading live, there's a benefit from trading futures, like when it comes to taxes. But you have to consider paying the tax man, okay? So if you need 10K to live off of and save, you need to make more money than 10K. You need to make more money as a trader, okay? I would say set your targets high, but maybe sit down with your accountant and map out how much money you need to make and how much will be taxed for the year, and then break that down monthly, okay? And then know that some months will be greater than others, right? So you may want to double that amount. Like I didn't say when I make 10K a month, I'm going to leave my job. No, like I had higher targets because I understood the things that I'm telling you now. Some months will be better than others, okay? All right, so the path, playbook with edge first. If you trade what is moving, that's 50% of the battle. Then have a consistent risk. Everything is a B trade. Everything is a lower risk trade until you build data. Number 3, execution. Focus on mastering the ability to trade that system that you have. Number 4 would be psychology, professional mindset. And while you're doing those things, focus on capital. Sit down, think about what makes most sense for you. Stacking up eval accounts or going live, maybe going the stock route. And I have to emphasize again, if you have an eval account, let's say you have a 300K account and you have 10% drawdown, that's a 30K account. And there is a risk with companies going down. Some of the traders that have been exploiting and taking advantage of the prop space, you can go on Twitter, you see people looking for eval firms, right? So it's a great way to start, but you have to think about what you're going to do, especially if you have a family to take care of. Okay. So think about if the funding space is the best route to go versus if going like the stock route. Like I know traders, I just went to lunch with him not too long ago. He says, look, I start off with 60K at the beginning of the year. And I think he's up about 480K this year. That's the difference between the stock space. You can generate a lot more money from a smaller account because of the amount of opportunities and range versus in the Forex, the indices space, like eval space. We just focus on getting more capital and then taking advantage of the opportunities. But the thing that isn't talked about a lot is the market efficiency conversation, right? So while it's not impossible, I know people that do make money in Forex, trading indices and commodities, and I'll trade those when they're in play. I found stocks to be a lot easier to make money than indices and Forex consistently. So here's some things to think about. I'm gonna do a part 2 where we'll just talk about strategies, right? This was just laying out some things. Now, going on 5 years, having met a lot of the traders that are online, that are known in social media, as well as been in the room with professional, verified, multi-million-dollar, 8-figure traders, and also being very well read in the industry. These are some things that I wanted to bring to the table for you to consider. Thank you for supporting the channel and helping us reach 100K. Please leave in the comment section what you liked from this video. Also, I'm going to leave a poll so you can tell me what you want to see for the next 100K. We're aiming for 1 million. We want to help bring the professional knowledge to the retail trader like you and I. You're one of those traders that have been trading indices and you're looking to firm up your selection process and bring order flow into your trading. Book a call with me in the description below. Also, I'll be doing a lot more content on stocks in the near future. Please like and subscribe. If you want to see a video on how to bring order flow into your trading, watch this video.